All right. Thank you, ladies and gentlemen, for joining us. We're going to talk about what we call a weird, or at least some people call it a weird strategy, and it's a bit of a secret. You probably have never seen it or heard of it. And we're going to talk about automated options trading, something that's also quite unique. We're going to look at stock indexes, trading those in all directions, and then also how to automatically manage your option trades with risk and reward parameters. And we're going to look at one-touch trade alert, something you've never seen before. And we're going to go ahead and take a brief moment here to mention risk. And while I do that, just so you know I'm real, let's see if I can show you my screen. Okay, there we are, folks. I'm here. So we'll keep that up for just a moment, but then we'll shut that down a little bit later to get more room on the screen. But remember, we're speculating, and there's always risk when we're speculating. So do take a moment to look at the risk disclosure. It is important. Remember, all funds should be risk capital when you're trading, and past performance is no guarantee of future results. We're going to look at algo-generated option spreads, pre-built option trades with one-touch trade alerts, a very unique approach, automated risk and profit controls. And we can do this in bull, bear, and even non-directional markets. So if you like what you see, we're going to show you how to take action at the end. So stick around. We have a lot to cover. And a little bit about who we are. That's yours truly there. We're down on the trading floor with some of our staff trading S&P 500 options. That was several years back. And of course, the trading floor does not look like that anymore. People have been, I guess, relegated to the sidelines because of the machines. But we've been doing this since 1997. As an introducing brokerage firm, all of our staff have multiple decades of experience. We're regulated, of course. We're located in California, and we've traded tens of millions of options and futures over the years. There's a picture on the trading floor. I believe that's New York, Coffee, Sugar, Cocoa Exchange. So really with all that experience, what we want to try to tell you is don't try to figure everything out by yourself like the mad scientist here. You see the stock ticker is figuring out the stock prices with his research here in his basement. So use our help, use our decades of experience and development from industry veterans. We're going to show you this technology. And a little bit about myself, I'm Erik Gebhard, been doing this about 30 years now. I started back in 1991. I have my BS in business administration from the University of Southern California, and I'm also a co-founder of LTAVEST. And there's my textbook. Enjoyed that class, learning investments, derivatives, so on and so forth. There's our section on options and modeling, pricing, and all that, but you don't need to worry about all that. But that piqued my interest. We were looking at crude oil and gold prices at the time, jumping in value because of the oil fields in Kuwait burning. That was quite a interesting time in terms of a narrative to learn about the markets. But I was in the securities industry for a time with my Series 6 and 63 licenses and mutual funds, but I enjoyed futures, and that's where I ended up. So that's where I've been ever since. So with that said, what I'll do, let me turn off the webcam for the moment. And let's talk about 3 barriers for traders. And we've all experienced what I'm going to show you, so I think we can all relate. Day trading, first of all, it's not that easy, folks, and there's some barriers to day trading. Let's take a look. It's making a lot of headlines, especially this year, especially in the last few weeks with GameStop, so I thought I'd throw this in there for kicks. Day trading's a difficult thing unless you bought GameStop here and sold here, right? It always looks easy in hindsight, but it's difficult. Here's a gentleman, he had a firm, he trained day traders, and over a 5-year period of time, he figured that 3.5% to 4.5% people were actually successful producing consistent profits over a period of several years. And then here's a study in the Journal of Financial Markets. It says here less than 1% of the day trader population is able to predictably and reliably earn positive abnormal returns net of fees. So the odds are against all of us if we want to be successful day traders. Let's just face the facts, folks. It's not that easy. But having said that, it has the appearance of being easy, at least this last year, or at least easier when you have a market that's really moving pretty much in one direction, which has been, as you know, up. But really, day trading often requires, obviously, screen watching. Who wants to babysit trades all day? staring at your screen. So we don't really want to be like this guy here, although you know, sometimes people think it's necessary, but it's not. And here's the other barrier, number 2, precision. So let's think about it. If you're going to be trading, whether it's no matter the instrument, a lot of things have to go right. In fact, almost everything has to go right. If you're going to, you know, buy a share of a security, whatever it is, you need to be perfect with picking the correct market, pick the correct direction, apply the correct strategy. Then you have to have the correct entry timing, which is essentially price, and then exit. How do you manage the risk and reward? So all those things have to line up. And it turns out that monkeys might even be better traders than all of us. I love some of these studies, hypothetical back testing with monkeys throwing darts, and they outperform the index by an average of 1.7% per year. So there's your best day trader, folks, right there. Now here's the third barrier, emotions. Basically us. This guy here is perplexed. Remember him, Get Smart. And so you don't want to end up like this with your emotions getting the better of you. Still thinking the market was wrong as you're made it all the way and taking your trade into the grave. Markets are always correct and we aren't. Ed Sequoia says it can be expensive trying to convince the markets that you are correct. I think we can all relate to that. That's from Market Wizards. He's featured in that book along with some of the turtle traders and I think Paul Tudor Jones, Jim Rogers, and there's 2 or 3 subsequent books to Market Wizards, which you might enjoy getting into the head of these, the heads of these bigger traders. So we have all these thoughts running through our head every time we place a trade. Let's admit it, folks. You get hopeful, you get fearful, you have anxiety. Sometimes you're bored, you want to just do something, so on and so forth. So really, we have bad wiring. That's the problem with trading. We have a built-in bias to make poor investment decisions. We chase past performance, we sell the lows, and we buy the highs. And that's really what we do too often, even the best of us. And that's the reason why is because our brain kills our our investment returns, according to Real Investment Advice. And I think that's kind of a fair assessment. And Motley Fool says there are 3 common biases when making investment decisions. In fact, we become, you know, the worst financial enemy is us. That's kind of one way to phrase it right here. But we can all relate to this, and even if we don't always recognize it at the time, confirmation, anchoring, and recency bias whenever we're placing a trade or even making a decision on any investment. We end up sometimes like this gentleman here with blinders on. He says, I'm doing great. My stocks are great. What else do I possibly need to know? And he's just completely oblivious to the world around him. So there's definitely a bias there. You could call that recency bias or confirmation bias. It all depends. But let's jump into part 3 here before we jump into the demo. We're going to show you a live demo, by the way, of our trading technology. And remember, algo trading, computers, machines, whatever you want to call them, they are completely non-emotional, and it turns out they're dominating the marketplace. I think something like 80% of the marketplace is driven by machines. And here's an article in Bloomberg talking about robots outwitting humans on their investment picks, so that's no surprise. But that's really revolutionary trading, right? That's just the sign of the times, and it's really not going away. So here's what trading used to look like, folks. This is just a grainy old video I have from years back on the trading floor. Okay, and now here is what it looks like now. This is how it looks, all of that seemingly chaotic mayhem on the trading floor, which actually was very efficient and very effective, even though it didn't always look like it. But this is what is replacing everything. No emotions, automation, built-in controls. So how can you use this automation and this technology to trade options and sort of compete in this new landscape? So that's what we're going to talk about here in part 4, automating your options trading. And then we're going to look at a really unique strategy, a weird strategy, let's say, for automated trading, something that you're going to want to definitely stick around for. So we're going to look for strategies in up, down, and even non-directional market conditions. We'll look at trading stock index futures markets in particular, and we're going to show you what the advantages are for that space. Then we're going to look at our secret strategy we talked about. But first, a little background here, kind of set up the trading we're doing. If you're familiar with selling options, that's okay. It's going to go quickly, and there's also a new twist, so stick around. If you're not familiar, it's something we've made very, very simple and approachable. So stick with us here, folks. Insurance companies, how do they make money? Obviously, you pay premiums, and they insure you against risk, and they basically sell and manage time. That's all they're doing. They hedge themselves, of course. They're consistent and patient in their business model, and they just look at probabilities. They're simply looking at math and what are the long-term odds. So they look at statistics, actuarials, expected returns. They simply crunch numbers, and they have a process, and then they tell you what the premium is based on, you know, all the factors and inputs on how old you are, and you know what your driving record is, or whatever, health record, whatever it might be. And really, they're looking at statistics. Something we might know as the law of large numbers. We don't think about it, but you know, flip a coin 1,000,000 times, you're going to get 50% heads and 50% tails. You flip that coin 5 times, you might get all heads or all tails. So we're all familiar with how that works, and that's sort of the whole concept behind even being the house, or like a casino or an insurance company. Higher probability outcomes. So example, you spin that roulette wheel on that zero 38 times, $100 each time, you're going to lose $200 according to the law of averages, and that's $5.26 on average. But that becomes the house edge. So now you know why casinos are so big and so successful. They only play games in which they have a big edge, and this is an example. I think roulette's one of the biggest. Blackjack might be one of the smallest, actually, depending on, there's one card or 6 cards or whatever, decks, I'm sorry. So, and also what the rules are. So anyway, but they do this, they'll have you sit there and play forever, because ultimately they have the edge. And higher probability outcomes, maybe looking at a baseball analogy, what's the higher probability, a grand slam or a base hit? We're clearly the base hit, not a home run. So what about high probability option strategies? How do you collect those premiums and those base hits? Well, you would go short or sell options, collect the premium that the buyer is paying you. You need to be consistent and patient, just like an insurance company, but you need to manage your risk, because you know that you're going to have losers for sure. And there's no matter what anyone says, you're going to have losers, folks. Manage reward. Don't get greedy. That's a big key right there. And I'm going to show you how we handle that. But you need the proper tools to make this happen, because it can be complicated and overwhelming. There's so many variables when trading any instrument, especially options. So many base hits, that's what we're going to look for. We're going to look at some short option strategies, premium collection, non-directional, bullish or bearish, higher probability outcomes with predetermined risk. Let's look at a couple credit spreads here. These are insured positions, predetermined risk and reward, and they can be non-directional in nature. So advantages of credit spreads on a stock index, not an individual security. So there's a large margin of error when you're trading with a stock index compared to an individual security. And we're going to run through some of those examples, and don't worry about this chart yet. We're going to get to that in just 2 or 3 minutes. But first, we're going to look at 2 Greeks. You can get into second order Greeks and derivatives upon derivatives, and we don't need to do any of that, not for our purposes. If you know what they are, great, this goes quickly, and if you don't, we've made it really simple. The first thing we look at is delta. Delta is the approximate probability of an option expiring in the money. So if a delta is 0.25, that means there's 25% chance expiring in the money, but conversely, 75% chance of expiring worthless. And remember, delta is always moving up and down with price and time. It's not static, and it is not the probability of a winning trade. So sometimes people assume that that's the probability that the trade is going to make money for them. That's not correct. Now, theta, time decay. Let's look at time decay. Every option has a limited lifespan. So theta refers to sensitivity to time. It's a negative number. It equals 1 day of time decay. For example, if an option's 10 points and theta is negative 0.05, The next day the premium is 9.95. The next day it drops to 9.90. So basically the value decay or the theta decay has an impact on that premium. So this is what it looks like on a graph. You see as you approach time zero, the percent of the premium remaining decreases more and more rapidly. Now here's a graph here of a call spread. In this example, we're selling a 35.30 call. You receive 4.5 points, and then you buy a 35.50 call simultaneously, and you pay 2.25. So the net result, 2.25 points, $112.50 minus any commissions and fees. So simply put, you sell an out of the money call spread, collect that money. That's what it looks like on a graph. You're selling an out of the money put spread, same type of thing. In this case, you sell the 29.90 put, you're collecting 3 points, and then you buy the 29.70 put, you pay out $1 point or 1 point for that, and your net result is collecting $100. So that's what it looks like on a graph. Remember, these are not naked options. Everything is insured or hedged. Your maximum risk is capped in advance. So these are what is known as covered spreads. So no naked trading. And there's a big advantage, by the way, if you're doing covered spreads. In fact, we would never ever suggest trading naked options. If you're doing it or some people are telling you to do it, it's going to probably work for a while until it doesn't in a big way. So I've never seen that end well after 30 years. You only sell covered options. Not only is there unlimited risk with naked options, but you're going to have margin calls, and that's going to really jerk your trading around, force you out of positions and so on, and make you liquidate and take risk off of other positions, and the market's going to be trading you. So anyway, enough of that. Iron condors, I'm sure some of you are familiar with that, but let's look at an example here and then how we do it with our automation. So it's a simultaneous put spread and call spread. So what am I talking about? You sell an out of the money call spread, simultaneously sell an out of the money put spread, collect the premium on the calls and the puts. Just that simple, folks. So here's that weird strategy we talked about. You're probably curious, so let's get into it. It's a bit of a secret because it's really our design. It's called a dragonfly and has 6 legs or 6 different strike prices. And here we go. Let's take a look. It's a variation on the iron condor. And let's walk you through this. So you can see the, in this case, the E-mini S&P 500 kind of moving along here. You see calls above the market and puts below the market. So here's the structure of the trade. Each condor, or I'm sorry, each dragonfly sells in increments of 4. So you're selling 4, in this case, 37.80 calls. You buy 3 further out of the money calls, and then you buy 1 closer to the money call. And notice this one here is 50 points closer to the money. So quite a bit closer to the money compared to the 4 that you've sold. And let's look at the puts here, same structure, selling the 4 puts, you buy 3 further out, and you buy 1 closer to the money. So for every put you've sold, you've bought 1, and same thing with the call. So these are still covered on both sides. And notice too, 50 points closer to the money, 28.70 put, 50 points closer to the money. And the reason we build this trade this way is, I'll show you in the demo, we'll look through some simulations and so forth, but this call here that you own is going to have essentially be less impacted by theta decay, and it's going to gain in value more quickly if the market's moving up closer to these this upper boundary here where you're short those calls. So it's going to have a completely different risk and reward parameter and at times in particular. We're going to show you that. But here's the question: how would you know which dragonfly to build or condor? How do you know where to begin, which one to buy or sell? In this case, selling a condor, but of course you can buy condors too, and I'll show you that. Which strategy to apply? What's the price? What's your timing? How do you manage the risk and the profit? So a lot of questions there. So that's what we've got the answer for you. It's called ThetaTrader. Actually, some of our floor traders down there. Pre-built option spreads. That's what we're talking about. Our proprietary algo will create what we call theta trades, and you can have advanced strategy automation as well to handle those trades for you, bull, bear, and flat market conditions. and then automated risk and profit control, something called the RTI, or the risk thermal indicator. So ThetaTrader is simple and effective trade selection and management, taking something complex like option spreads and making it simple. So it's time to jump into the demo. So just bear with me as I jump over to a different machine here. All right, folks, here we are. You're looking at the dashboard for ThetaTrader. And let me walk you through here what we're looking at, just so you can see what the home page or the dashboard looks like. You'll notice this section here are theta trades. Below it would be your open short positions, any open long positions below it here. And here's your account info. ThetaTrader is pulling directly out of your LTAVEST trading account, and then current price quotes on the markets that we're primarily trading. So why don't we start here at the very top and let's break it down for theta trades. And remember, this is what the algo generates every day on your behalf. So this is what the formula suggests each day. You can see there are bullish strategies, bearish, and neutral strategies, all pre-populated. And we talked about stock indexes. We're looking at the E-mini S&P 500, NASDAQ 100, and Russell 2000. Those are the primary markets. And we'll show you why in just a moment, but really, let's focus on the ES. That's where the majority of the volume is. And we looked at the Condor and the Dragonfly. So let's break that down here. Let's look at an Iron Condor. Now there are trades available anywhere from 16 days till expiration out to 58 days till expiration. So these are all pre-built. They're already built and ready to trade for you. The strikes are chosen, the expirations, and the valuation. We'll look at the April week 3 expiration. Let's click on that. In fact, before I do, let me just explain this here. This acronym here, potential profit at expiration, and then your targeted annualized return at expiration. Now keep in mind, it's not realistic to ever expect to generate a return based on the targeted annualized return at expiration. It's only there to really compare one trade to another, because it just assumes that if you were to win on this trade at expiration, then the very next day you'd place the same trade and just continue to win on that same trade essentially throughout the remainder of the year, and that's not realistic. And your profit potential at expiration too is there also to compare one trade to another, because, and I'll show you why we do this, but we never hold trades till expiration. So it's also something to keep in mind. Just use these metrics here to compare one trade to another. All right. Now, the first thing I like to do, and I'll explain all this in a moment, is I look at the chart. So here's what it looks like, the overhead macro helicopter view. This is what the trade looks like. Here we're trading now. You're selling this out of the money call spread and put spread. And you'll notice here, let's go through this bit by bit. Days till expiration, expiration date. Settlement value on the spread is 2.5. The net premium, put risk, call risk, commission, available capital in the demo account. Now here's the thing, cash required, and this is your profit potential maximum. So it's almost $900 to make about $100. And here's your targeted return on cash, just over 11.6%, and targeted annualized return. But the question we often get is, why would you put up $900 to make $100? Well, let's look at the strike prices. Remember, these are pre-selected by the algorithm. The put option, you're selling the 3360 put, has a delta of 9.97. So remember, we talked about delta. So that means there's over a 90% probability that this option is going to expire out of the money. And the call option that we're selling, delta is 6.8%. And you're looking at, once again, a 93% probability that this call option is going to expire out of the money. So that's the higher probability outcomes that we're looking for when we're working with ThetaTrader. And it's pre-populated to sell because you're selling a condor. Quantity always defaults to 1. I'll just put in, let's say, 4. You'll notice the margin requirement and potential profit, everything changes with quantity. And then we can leave the gross value at 2.5, or you could change it depending on whatever number you had in mind, but we'll go ahead and leave it alone here for this demo and go ahead and place the order. So you see here it's placed and it just assumes you're filled in the demo account. All right, now here is a really nice little feature. We're gonna go back and I'm gonna show you, instead of looking at a dragonfly, I wanna show you the trade simulator. So we can go backwards in time with our simulator and look at any period of time and apply any trade, whether it's a condor or a dragonfly. And I've loaded some up here just for the sake of saving some time. Okay, and this is a great feature. You'll see here, this is an iron condor for the January end of month expiration. So the first day on the trade was December 1st of last year. And we use these buttons here to control. You can go to the end, or you can go one step at a time, meaning one day at a time, or backwards a day at a time, or just use the play button and watch the trade play. But you can see here, as you watch the trade play, it had 60 days till expiration when we first placed the trade, losing a little bit of money right away, and that's normal when you're selling premium because theta decay hasn't worked yet. And now you'll see the green, the RTI is green, and that means do nothing. The signal is to do nothing, allow the trade to mature. Nothing to do, it's turning profitable. All systems go, essentially. And we'll go ahead and see what happens here. Okay, so you can just see the market's moving sideways to slightly higher, but really within range of not really getting us into trouble. And you can see the trade is becoming profitable. And it turns blue. And what does that mean? Profits. That means take profits. The algorithm says it's now time to take profits when it turns blue. So this is your profit taking signal here with 15 days remaining on January 15. Now here's the key. So I'll re-emphasize this and I'll show you more about it in just a minute. ThetaTrader automates this. You do not need to screen watch or do anything. Once it turns blue, ThetaTrader will automatically close out that position for you. And we can do that with profit targets or risk. And I'll show you that in just a moment. But now remember, that's an iron condor trade. Worked out just fine. Placed on December 1st. And that's for the January end of month. Now let's look at the dragonfly. So the same day, instead of a condor, what if you placed a dragonfly? Let's find out. And look what happens here. On December 28, it turns blue. It issues a profit-taking signal. So the dragonfly matured much more quickly than the condor. Remember, we had to stay in that trade till January 15 before there was a profit-taking signal according to the algo. But with the dragonfly, we were out, what was that, 17, 18 days earlier than the condor. So you can take your limit off the table and put it into another trade in the case of the dragonfly versus the condor. And that happens a lot. And we talked about the structure of the dragonfly. Remember, this call option that you bought, you own it. So it's also closer to the money compared to the ones that you sold. And that means it's not going to decay as rapidly in value. And at the same time, it'll increase more rapidly if prices start moving higher, closer to that upper boundary. So the dynamics of this trade and this structure can make a big difference compared to a condor. We like it a lot. We use it a lot. It's kind of our primary bread and butter. You do give up a little bit of potential profit, but we like the idea that you can sometimes get out a lot earlier. And also we like the idea that sometimes a condor may have a loss and a dragonfly may not. So let's look at another example. Here's another condor, January 2 of last year. Okay, it turns yellow. Elevated risk, but do nothing. You don't have to do anything. Just letting you know, the algo says the risk is becoming a little bit cautionary here. Still green, do nothing. Oh, it turns orange. That means a more elevated risk or threat level, and then it turns red. Too much risk, get out. Now you can automate this as well. When it turns red, according to the algo, you close out that position and you are on to the next trade. Take your loss and move on. So that would be the condor. Now, on that same day, January 2, instead of a condor, maybe you placed a dragonfly. Let's watch what happens. Turns yellow, a little bit of cautionary risk there. And look at that, it turns blue. It gave you an opportunity on that day to take profits off the table. And as opposed to the condor, it never actually turned profitable, but the dragonfly did. So that's a really unique trade structure. Just running through a couple simulations, we'll do one more. Here's a trade from a while back on a condor. And look at that, it turns blue with 37 days remaining. So that trade worked out. And let's compare that to a dragonfly. So this dragonfly turned blue with 41 days till expiration. So you can see that a lot of times dragonfly will mature more quickly than the condor. And the whole idea is to take your risk off the table and set a new position. So that's why we love these dragonflies. And let me show you how to handle the automation. You just go to the settings link here. And all you do is account settings. You click this box to activate risk manager and activate profit directive, and then save those settings. And then from there, ThetaTrader does the rest for you. And then you'll also note, I'll point out a couple other things. In fact, let me jump over here first. You'll also note on the home page, you can see the open short positions and long positions, but also you can look at them all on one page. Let's jump over to the open positions page. So you see here there are 8 short positions on the page currently, or basically in the demo account, and anywhere from 42 to 58 days till expiration. RTI is green on all of these, and if you wanted a little more depth on any one of them, you just simply click on it. We can drill down, get a little more granular. And you can see here when you place the trade on February 11, so far it's all green, nothing to do. This is not much to see on the graph yet because it's only a few days of activity there. But that's how easy it is to see your open positions at a glance. And then this is how you look at closed positions. And you can filter for any market and any date, but we're just going to look at all of them here. You'll see a total of 20 on the page, 19 winners, 1 loser, short positions, 15, long positions, 4. And your total P&L on all these closed positions. It's just a demo account, folks. I use it for webinars like this. And as you saw, I just pick any theta trade and I just place the trade, and that's what you see in the demo account. So at the moment, these trades are doing very, very well. And once again, you could do the same thing if you wanted to look at the history of any trade. You just click on it and drill down. And this was just selling a put spread in this case. Then it took profits here with 14 days remaining. The algorithm said that's enough, time to get out. All right, so that is how we do open positions, closed positions. You saw on the Theta Trades page how to look at a dragonfly, how to look at a condor, how to place those trades. And then let me point out a couple other things, and I want to show you the best feature of all. We have research we're doing every day, of course, proprietary to LTAVEST. It's our TradeScope newsletter. We're looking at technicals and fundamentals, of course, and looking at market outlooks and trying to position our trades accordingly with the help of the proprietary research. And then we also do a daily narrative called the summary. And this here provides, we had week 1 dragonflies filled this week, yesterday actually, and here's what's happening in Asia and Europe and the US. And then of course, looking ahead and then economic calendar. So a lot of feedback from our proprietary research as well. And then we have a help file, which is actually not too uncommon, but this is where you would go, for example, if you want to know what all the color coding is and what the breakdown is on the color coding. And there's descriptions here on the strategies. So it's all broken down for you here, as well as within the help, right below the help file, there are videos on tutorials for ThetaTrader and education. So options, education, videos, all included within the ThetaTrader platform. All right, now I think I want to point out one other thing here, and then I'm going to jump to the best feature of all. Also want to point out that we've looked at neutral strategies or non-directional like condors and dragonflies. But remember, there are always bearish strategies and bullish strategies available. Here's one called a bull hedge. I'll give you an example. This is what it looks like on a chart. You buy an out-of-the-money call spread, and to pay for it, you sell an out-of-the-money put spread to finance it. So it's really a synthetic long position in a way, so we just like to call it a bull hedge. But there are strategies like that. We did some butterfly calls the other week. That was an interesting trade. You can even do half of a dragonfly. And what do I mean by that? Well, you don't have to do both calls and puts. Maybe you just do the put side of a dragonfly. So if you're looking for the market to basically go sideways to higher, that's what you would do. And of course, you could do the same thing, with the dragonfly call. So just wanted to point that out. We're not just selling premium all the time, 100% of the time. There are times, by the way, when we might simply just buy some put spreads or call spreads or butterfly spreads or what have you. So just want to let you know it's all available, but primarily ThetaTrader was designed to make collecting premium easier because that can be a real mess. All right, with that said, let me show you the best feature of all. All right, a little bit of humor there. So with that said, we can make it easier. This is what clients really can't live without. Trade alerts. And we can do this in just 1 minute. And that's not hyperbole. One-touch responsive trade alerts. And what am I talking about? You receive the alert on your device, and all you have to do is touch accept or reject. That's it. Our technology handles the rest. For example, the alerts are live and they're integrated with your account. So the technology is all integrated with your account. If you like it, you touch accept and the order is then placed. Why don't we look at an example here? You get a text, you touch the link. You get a graph, you see an explanation of the chart. In this case, it's a condor, the trade. Notice your account, the net premium collected, cash required, and notice this, the quantity is already correct for your account. Everything is pre-sized for your account, and the value is already determined for you. And you'll notice the days till expiration, targeted annualized return. And then if you like it, you just touch accept, and that's all you have to do. Let's look at that one more time. I won't interrupt this time. Okay, folks. So with that said, quite honestly, people can't live without those alerts anymore now that they're kind of become accustomed to them. So those alerts will go out during trading hours, and you can be doing anything anywhere. If you have your phone, your pad, whatever it is, you receive that alert and you just touch the screen. That's all you need to do. Our technology handles everything else. So here's the offer. Become a member and ThetaTrader user. Our ThetaTrader membership gives you some enormous benefits. Here's what you get. Of course, ThetaTrade, the software itself, you have the theta trades. Remember, the proprietary algo creates the option spreads for you. So you don't have to labor over what trades to choose and look at option chain and try to figure out the strikes and values and expirations. The algorithm does it for you. Simple and effective trade selection. Remember, the risk thermal indicator will automatically close out those trades when they turn red or blue. So that's what we call autopilot and non-emotional trading. We have that trade simulator. You saw us use the simulator. And of course, you don't have to play the chart day by day. You can just go click the end arrow and just see it instantly. So you can go backwards in time and back test the various theta trades. It's a unique feature as well. So you have theta trades, the RTI, the simulator, that software valued at over $3,500. And then of course the one-touch trade alerts. Remember, these are integrated with your account. You don't have to receive an alert and log into some other platform and then try to copy the alert that you received into your platform and hope that you get it right. Because you know what? A lot of people don't, and I hear about it. People call me, they say, I like the alerts. In fact, I just made a mistake on an alert. I did a buy versus a sell. I mean, that's a huge buy-sell error. That's enormous. That's a big problem. Or they chose the wrong expiration, or they did, you know, unbalanced, or whatever it might be. So you don't have to worry about that with these alerts. Each trade is designed and tailored for your account in terms of the size of the quantity of the trade, as well as the strike price of the trade. And remember, these are live, integrated with your account, and all you do is touch accept. And then once the trade is filled, you saw how the RTI can automatically manage the trade for you. So that alert software there, valued at over $4,400. So once again, ThetaTrader software, the alerts valued over $8,000, but here's the real key. You get to tie it all together with a private coach. We're a completely different business model. We're not just online only chatbots. We're real people. You get to work with a private coach with your 1 hour screen sharing sessions. You can talk about your trade selections, the RTI, even, you can even adjust strike prices if you want. Some people do, but kind of defeats the algo purpose, I think. Trade alerts and looking at advanced strategies as well beyond just what might be in the theta trade. So there's a lot we can do with that private coaching. You have a co-pilot, develop a relationship with a person with decades of experience, licensed, regulated, discuss history, review history, $7,500 value. I think that's way undervalued. I know people are selling education for $25,000. And what we're telling you, that's fine, you can be educated, but you don't need to have that to do this, because we work with you and we'll provide you what you need to trade with ThetaTrader. So remember, ThetaTrader software, the alerts, the private coach, valued over $15,500. And in fact, there's more. It's a little corny, but I thought I'd throw that in there. Remember, the proprietary research, valued almost $3,000 for TradeScope and our daily commentary. Then, of course, the video tutorials, that's just part of the ThetaTrader platform. So to summarize, an $18,504 value with a ThetaTrader membership, ThetaTrader software, and the Theta trades, the trade alerts, the private coach, and the research. So here's your special offer. It's a live presentation. It's going to be highly discounted because it is live. It's not just our typical what they call evergreen retail rate that's on the website. $1,497 is the cost of the ThetaTrader membership, but we're going to do a lot better than that. 60% discount before Sunday night. Try to encourage you to take a look at it. $597, one-time payment. That's your lifetime membership. So just to be clear, we get the question all the time. It's only one time, so it's not quarterly, monthly, yearly, one-time payment. And that's $597. And there's the link, cf.altavest.com/TT. And that's my direct number. And of course, call if you want to call now, that's fine. Have any comments or questions, just it'll go to voicemail or it might bounce to somewhere else, but that's fine. But really, you can go right to the link. And here's no excuses, folks. We made it so easy. If you sign up and a month from now you decide it's not for you, it's not a good fit, we'll refund that membership fee. So 30-day money-back guarantee on the membership fee. We're not going to hold you hostage. It's not how we operate. Been doing this since 1997. And here's a few FAQs, and I'll see about getting to some other questions and so forth as well. But there are a few FAQs that people always have. So no, we do not trade stock options. Remember, we're only doing options on E-mini stock index futures with ThetaTrader. Okay. And what about tax efficiency? You can lower your tax rate by over 10%. Well, futures and options are tax efficient. 1256 contracts, meaning that's the IRS code. So they receive basically special treatment. So the combined blended tax rate when you're trading futures and options is 10% lower than if you're trading stocks. It's a big deal, folks. Here's an example. Trading individual stocks, 20% return on 100 grand, you get a 12.6% IRR. Same result with futures, 20% return on 100 grand, 14.64% IRR. Tax savings of over $2,000 because you're trading in a tax efficient environment. That adds up to some serious dollars if you're trading in tax efficient with instruments that are tax efficient. And there's no more itemizing. With futures and options, you simply receive your 1099, has your P&L, and that's it. There's no wash sales and itemizing, all that nonsense. IRAs, yes, ask us for deals, how to qualify. Self-directed IRA accounts, absolutely. Forbes says they can diversify a portfolio by adding investments with a low correlation to stocks and bonds, help control volatility and limit downside risk in portfolios. So you can definitely do self-directed IRAs, but there are some different requirements, so do ask us about those details. Here's another question. Why stock market indexes versus individual stocks? Well, let's look at a couple reasons why. They're less volatile. So an index might move 2 or 3% in a day. That's a big move. Individual stocks, as you know, can move a lot, 10, 20, 50% in a day. And how about the secret strategy, that dragonfly? You cannot use a dragonfly trading securities. It just doesn't work. And I'll show you why in just a second. And also, we like to just focus on 1 or 2 markets, not thousands of stocks and funds and ETFs. It's too difficult to track, in our opinion. So that's why we specialize in this. So here's an example why we trade the indexes. How about the AMC, 1,000% rally in a week? You're not going to find that in an index. It's great if you were long, but if you weren't, that's the kind of thing that can wipe you out. And here, non-correlation. So here you have GameStop, skyrocketing, and meanwhile the broader stock market choked on that. So really the key I think we're getting at there is simply that if you're trading an index, then a lot of times it can be non-correlated to what's happening with individual shares of stock. So we like that non-correlation. Now here is the reason why we trade the E-mini S&P, or the ES. Liquid, efficient, and cost-effective. I think you'll probably learn something here for sure. The ES is 2.5 times larger than all the ETFs around the world. So that was a shock to me actually when I figured that out a while back. So it outtrades all the ETFs around the world. That's from, I think that data is from last year. I don't know if they have the updated data, but I would imagine it's very, very similar. So this is the market you want to be in, folks, the ES, the largest dollar size. So compared to the SPY, everyone talks about the SPY, the ES average daily dollar volume is almost 10 times greater compared to the SPY. So the ES is the boss. The ES is the boss, folks. 5 other reasons to trade: deep liquidity, average daily volume 630,000 2019. We'll have those numbers, I think, for 2020 soon. So there's just so much depth and liquidity, largest market share. We talk about densely packed strikes and 100 annual expirations, ensure granularity and coverage that you would need. So that's one of the reasons why, for example, you won't be able to do a dragonfly on a security. The strike prices don't exist. The granularity is not there. Now, maybe if you're looking at, something like Apple, you can get closer to the money strikes above and below the market, and that should be no problem. But if you want to go really, really far out of the money, it's probably going to be a bit more difficult, just the way it is. So we talk about granularity and strikes. Here's an example. Here's placing a condor here with puts and calls. Then some time goes by and you place another one with different strikes on your puts and calls. And the same thing here with the blue line, another set of strikes on the puts and calls. So you want to keep your strikes laddered. You don't want concentration risk. And that's something you can work with. We can help you with as well with your advisor. So it's easy to track just 1 or 2 markets, and margin is efficient, and there's a clear cost structure. And also the superior execution. The ES options offer a savings of $4 to $15 per contract. So tight bid offer spreads and no hidden costs. So the ES options are not securities. They trade at the CME Group, the largest futures exchange in the world, on the Globex exchange. It's the electronic marketplace. So every order is treated equally, large or small. Now that's a big deal these days, folks. I'm going to kind of beat up on some of what's happening here in just a second, but I won't beat it to death, and we'll move on. But there's no payment for order flow nonsense like there is in the stock market. In fact, Congress is hearing from, Robinhood and so on and so forth about all that. I mean, these guys are, they're basically, I don't know how it's legal what they're doing, but it is. And here's a Robinhood paid $65 million fine. They said here, you're saving a penny to lose a nickel trading with someone like Robinhood. Says if you're not paying for something, you're going to pay for it in a way you can't see it. I think that's important, folks. And I'm going to beat up on Robinhood and the others that claim to offer free trading. That's my grievance here. I don't care. I mean, I'll trade stocks. I mean, there's nothing wrong with that, but it's not free. So the SEC finally caught up to them. And they charged Robinhood with misleading customers about how they make money. So here, Robinhood provides inferior trade prices, costing customers $34 million. And I would imagine the number's quite a bit larger than that. And here's an article today exposing the Robinhood scam. So basically, what do? It's called payment for order flow. Quite simply, you place your orders with Robinhood or any other brokerage that says they're offering you free trades and stock trading, I'm talking about, and they don't fill the order. A third-party market maker fills the order, and that market maker pays Robinhood for the right or that order flow. And the reason they do that is because they can fill those orders at less advantageous prices and basically pocket the difference for themselves. So everyone's kind of exploiting the retail order flow and the retail customer is really, so nothing of value is truly ever free. I think we'll just kind of leave it at that. And that leads to the question, what are the commission rates? Well, our ThetaTrader rates are 5.25 all in, and that's round turn. So they're competitive in the futures and option space. Here's a brokerage here copied there at 225. So at first glance, you think that's cheaper. It's not. That's per side. And then they add more fees on top, and it's even higher than what we charge. So yeah, some people are less, some people are more, but our rates are competitive, and quite frankly, we're a completely different level of service. We're not even really trying to compete with them on that online only type of universe. What's the performance of ThetaTrader? Well, keep in mind, everyone makes their own trading decisions. Every client is different. Everyone has different results. But I will remind everyone that all the numbers in ThetaTrader are net of all trading cost. So all the percentages and dollar figures you see are net. What size account should I trade with? We recommend $50,000 to $100,000 if you want to have multiple dragonflies and condors trading. If you want a free membership, absolutely, no trouble there. $100,000 or more account size, and we gladly refund the membership fee to you. And then I've got just a couple more minutes here. You want alternatives in your portfolio. We don't think stocks will rally forever. So you might want to look at some alternatives. That's the whole point. I think we're running out of time. So you've got kind of the running of the bulls there, chasing the market, FOMO, right? We're not going to get into all this here. I think we're running short on time. And let's see here. Oops. Just keep it coming. That's kind of a funny one. All right, so there we go. We're going to wrap it up, and I'll leave it right here. And let me see here if I had any other comments. Okay, I see the link, and I'm just looking through the questions here. Yeah, someone asked about IRAs. Yes, only futures options, iron condors, so on and so forth. And Anna, how are we on time?
Erik, this is the last spot of the day. You can go a bit longer if you wish.
Okay, I'll just try to get through some of these questions. Thanks for all the questions, everyone. Let me just jump through here. Yeah, that's a lifetime membership, and you pay one time. And we like the Dragonfly, actually. In most situations, we like the Dragonfly, but that's not to say we don't ever do condors. We do a bit of condors as well, but we do like the way the Dragonfly will hold up to certain movement in the marketplace, and the condor doesn't hold up as well. Yeah, this is only for futures, and yes, once again, IRAs. And someone asked about, depending on where you live, yeah, we have clients asking about trading over from if you're living in the EU or a lot of people in Canada or other countries, and it just depends. There's some regulations that don't allow customers from certain accounts for some reason, or from certain countries for some reason. You know, why we can't have a client from Canada is beyond me, but that's just the way it is. But if you do have a legal US residence, an address, then you can have an account. And someone asked, why is there a loss potential when you're doing a credit spread? Well, quite simply, the trade can move against you. No matter what trade you place, it always has risk. So if the market moved in the case of a condor and you're selling, let's say, the 3,900 calls and you buy the 4,000 calls on the S&P, if the market ran up too quickly, by too much in magnitude, then your risk on that, of course, is the difference between your short and your long strike, which is 100 points, minus the premium you collect. And then people are asking about performance. Yeah, everyone's different. It is self-directed, and the membership is let's see, what's someone asking here about the membership? Yeah, the membership includes access to all the software and all of our services. But when you're trading, of course, every time you place a trade, there's a commission. All right. So yeah, do feel free to reach out and visit our link, or you can send me an email. You can go to info@altavest.com or Erik@altavest.com if that's better for you, or cf.altavest.com/TT is the link. And with that said, I think we'll wrap it up. Oh, I see another question. Account size, we do suggest 50 to 100,000, but it's not written in stone, of course. I'd say the bare minimum would be closer to 25,000. Otherwise, you're limited to how many dragonflies you could do. And we are the brokerage firm. We are AltaVest. So we are the brokerage firm. This is technology that we developed. It's our own IP. And so if you are wanting to use ThetaTrader, we'd love to have you on board. You'd simply open your trading account with AltaVest. Any other questions, ladies and gentlemen? Anyone want to see anything else? I guess I've got some more time here. Someone's talking about managing losses, I see. Someone says, thank you. Someone says brokering. Well, managing losses is really what the RTI does. So the risk thermal indicator will automatically close out your position when the algorithm decides that there's too much risk. So when the RTI turns red, that position will be closed out automatically for you if you choose to do that. And the 597 membership, yes, that expires Sunday evening, and then it would revert back to the $14.97 retail rate. That's correct. And then remember too, if you're not 100% sure, or maybe you're 90% sure, you can certainly sign up. And like I said, if it doesn't work out for you, you change your mind. It's not a problem to rebate you. 30-day guarantee. So we're not going to hold you hostage if it's not a good fit for you. Yeah, we can't do really, I'd say 25,000, 20 to 25,000 really is the bare minimum. Otherwise, it just doesn't work. You just don't really get a fair shake at it, so to speak, in terms of trading. In terms of our favorite spreads, we like the dragonflies a lot. Recently we just did some butterfly calls that worked out well, and we just placed a bull hedge actually on this pullback. So we'll see how that goes. And yes, you can do qualified accounts. We have IRAs available as well, but also we have people just about every week with a trust account or LLC, or the basic individual joint. That's easy to do. A lot of times a individual or joint account can be done in the same day, but for the other accounts that might need more documentation, those take a few extra days. And we trade with Midland Trust in terms of our IRAs, and they act as our custodian for those IRA accounts. They're very good, and they do a great job servicing those accounts. Yep, good questions, everyone. All right, very good. So feel free to reach out. You can get me at Erik, E-R-I-K, at altavest.com, or call the phone number there directly, or you can go right to that link and sign up. And yeah, the commissions are 5.25. That's round turn, all in. That includes all fees and everything. And everything is, of course, net of all fees. So when you have a theta trade and it's calculating the potential profit or whatever it might be, All those calculations are net of all trading cost. All right, folks. If you have any other questions, feel free to shoot them out, or otherwise I'll just go ahead and move on. We'll close out the webinar for now. All right, that's it. Thanks everyone for joining us, and I'd love to hear from you. In fact, whatever feedback you have for the presentation, I'm more than happy to hear it, good, bad, or otherwise. It kind of helps as we present what it is we do, in the future as well.